And a very good morning to you, and welcome to the TriggerCharts pre-market rundown for Friday, August 26, 2022. How are you doing? Things are pretty good. We're in the depths, the doldrums, the anals of summer right now. Hey, I'm down in Florida, and I got to tell you something. It is brutally hot here. I'm sure the same about you. But what we also have is a pretty hot market right now, generally speaking, since that the pivot from Powell a few weeks ago, about 6 weeks ago. We saw the market say, hey, you know what? Maybe the Fed is going to back off a little bit. And we have a little bit of that going on again this morning. Raphael Bostek, a non-voting member of the FOMC, came out and said, I don't think we need to raise that much. Maybe 50 basis points. The next one is what I'm in favor of. Now, he's a non-voting member. And remember something, it is 9 o'clock in the morning today on the 26th of August. And that means that in about an hour from now, we are going to see the Fed, Jay Powell himself, speak at the big confab, the big Jackson Hole, Wyoming event that happens each and every year. All right, we're going to talk about a few things today. Before we do so, we have to, of course, talk to the compliance part of things, which tells us that investing involves substantial risk. Everything we talk about today is for educational purposes only. And I want to make sure you understand that we utilize different time frames for different things. One of the things that's really important to understand is a lot of times we'll use it daily. You could use it on 5 minute, you could use it on 10 minute, you could use it on stock, you could use it on an ETF, you could use our indicators on pretty much everything, because basically what we're doing is looking at one core item combination that's really important, and that is this. It is the combination of volume and price. Now that seems pretty simplistic, and it is, and it's I mean, when you think about it in its rawest mode, what is the markets all about? It's really about people buying and selling stocks, and how much are they doing it with? Are they staking a good amount of money individually and in mass, or are they doing it in a much smaller amount? And what happens is we can gather that information on a tick by tick basis. We could take that and then put it into our algorithm, our calculation, to see, okay, where is the highest volume nodes along a predetermined area that is what we call price. And when we look at that, we create something called a market profile. That is the core of everything in the indicators. And I'll talk to you about this now, and I'll mention that we took those indicators and we are now distributing those on a different, we'll call it a different umbrella, starting in about 2 weeks. And you'll all know about that in an email. Anybody that is a current subscriber will get an email first. Beta testers before that, just a couple of them. And by the way, if you are interested in beta testing, which would be basically a few weeks just to kind of see what's going on as we go through this, to put back and provide some feedback, please do me a favor, send an email to support@triggercharts.com, support@triggercharts.com. You need to make sure you have both the TradeStation current trigger charts and then the new ones that are coming out. Also, I'll mention for anybody that's here listening, do not uninstall your TradeStation indicators till the very end to make sure everything runs very smoothly here, which it will, but maybe that's important. Point is, though, I was making that the market profile that we designed, we worked with another group, and we have come up with a package of indicators that are based on everything that we do. All the things, the aileron is a little bit different, but we're going to be looking at things like the market profile, the altimeter, autopilot, all those things will have a slightly different name, but basically what they are is the guts are the same. The guts are identical, and pretty much identical. Some enhancements we've made, some things that you'll like, and you're going to get a lot more available. So just stick around. You're going to be, I think, really happy about this. And I'm popping this really hard, and I'm spending like 3 minutes on this because I really want you to be there for this. It's going to be something really cool. And we created these new packages around what we do, and some additional indicators for a little bit less money, but essentially when you combine the totality of the indicators, you're going to be paying a lot less. So that's going to be the first week of September, probably right after Labor Day is when the full launch is going to happen. Okay. All right. Let's talk about what's going on right now. If you have any things you want me to talk about, I'm going to message you right here. Look, see that in the chat there. Here, let me know what stocks or symbols or what you want to look at. there's a question that came in, which I will say, will you be able to do this on NinjaTrader? Yes, that is another thing. Not only will you be able to use the indicators on TradeStation, but there's a whole slew of other ones that we will release out which ones those are. I believe NinjaTrader is on the top of the list though. And if Nick, you are interested, make sure to send over that, you know, that you want to check it out and be on the list. So, which you are obviously if you're in this room right now. So that makes sense. Okay. So, let's see here. All right. So where are we? Themes. Well, maybe not so bad. Maybe it's worse. That's what's going on right now. Listen, we see that the markets have turned around dramatically this morning after that commentary. We also saw PCE prices come in pretty, I would say, modestly in a disappointment. In other words, the Fed's favorite indicator of inflation, which is PCE, which is the personal consumption expenditures, came in at a negative 0.1, I believe it was today. You could kind of look around what it includes, what it doesn't, but basically it was a disappointment. A disappointment in that prices actually are not increasing any longer. We saw a backup in prices. Personal spending is down. That was a problem. Personal income down, but personal spending thought would be a lot higher. This is an issue that we're seeing now and why the markets all of a sudden turned around to the positive, right? Where we see that the S&P 500 futures are up 12 points and the Nasdaq's up 52 and the Dow's up 140. Everybody's excited about the fact that now all of a sudden it is possible that the Fed is going to say, you know, we've done our job. I don't know about that. Because remember something, prices aren't increasing, but they're not going down either. And we're still at the top line. It's 1 month. We're focusing on one item. It may be very important to recognize that the Fed does not want this to turn around, because what has happened over the last 6 weeks is that financial conditions have loosened considerably. Now, I know you say, well, wait. If financial conditions loosened, how is it that our inflation numbers are not increasing? Well, it doesn't, everything's a lag. Market's treating everything right now like it's a coincident indicator, but there's a lagging indicators. Put that in your arsenal to discuss, right? You have lagging and coincident indicators, and you have advanced indicators. Advanced indicators, not so good. Coincident is what's happening now. So right now we saw PCE numbers kind of coming down a little bit, and they're a little bit laggy, but a little bit coincident at the same time. Those are not really great numbers to be looking at when we're thinking about the Fed, who has been on all-out supercharged mode to try to get things rocking. So maybe it's not so bad. That's probably, maybe it could be worse. What is happening right now is that we have players in the market that are trying to play both sides and getting offsided on a regular basis. Coming in today extremely short after a run up yesterday, thinking that the Fed at 10 o'clock is going to be really hawkish, but maybe not. Now, what's to watch? With the meme stock trades that we saw, this moment in time, again, reminiscent of what we saw in the pandemic boom of the markets. All of a sudden, a boom and bust, right? End of a cycle activity. We talked about that last week, but I want to let you know that this kind of went up and just fizzled out dramatically when reality struck, and the time frame from start to finish in this really shut down pretty significantly. What to watch? Retail sales, earnings outlooks. Retail sales are pretty poor. That is tying out to what is happening with the situation with PCE prices, although inflation prices and PPI prices still pretty elevated. And let's not even go to what's going on in Europe. That is absurd. But we're seeing that Bitcoin is picking up and gold has picked up from where it was earlier today. And of course, the markets are nicely green right now on, I would say, short covering before the bell. Over to over. So what is going on with this? I mean, we got overbought to oversold. Stocks and indices swaying back and forth very rapidly from overbought indicators. You can look at things like the RSI, support resistance. And we're swinging pretty readily through an area. One of the reasons is that there is a lack of volume, as we saw that move, I will say over the last 5-6 weeks, that we saw that move through an area that was really very low bottom. It was a volume. It wasn't a gap, which is volumeless, but it was a very thin area that now things are trading through very easily. See, one of the things that you can have happen in a market, and we teach this a lot. I just want to refresh you on this point. I think it's important. Really, it's a key issue, actually, that markets can really trade in two manners, right? We could trade horizontally through time, right? And it's usually horizontal, it's slow, right? Or we can go, on the other hand, vertical through price. And that's usually very quick. So these quick moves, and then you get a consolidation. That's getting messy, isn't it? Let's do something different. Let's do this one. It'll clear itself. So we got horizontal through time, vertical through price, vertical through price. There's a gap right here, right? This is the TNX, but this is just a point of reference. And you can see it goes for a longer time, usually in a consolidation mode, and very quickly picks up or very quickly drops, right? Through time. So what we're seeing right now is a situation where we have RSI and support levels really interesting, moving quickly. You're heading in, if you have a situation where RSI is moving and you're at the 40 right now, it just picks up and then it just comes back down like this, then it goes down and then picks right back up. These areas of RSI, for example, interesting, coincident, but support and resistance levels are hitting right on there as well. Again, you see support right here, backed off pretty significantly, right? We could draw several lines together. So we got to watch our levels. We got to watch the trends. In other words, the trending and oscillating indicators are very helpful. Combining them with these three lines and our autopilot and our various market profile indicators that give us where people are putting their money to work. That is the important part of all this. It is so key to focus in on how powerful the market profile core is. The market profile core is all about where we are dissecting tick by tick, where that volume is, the line in the sand for where there is no volume or extreme volume. And that's why you get these exacting lines that are based on swing algorithms that we built, right? So what's happening is that, the big issue right now is, we look at in between all of this, in between the moves like this, then the moves like this, in terms of the, various indicators and oscillators and the markets themselves. Well, we're in between, right? Direction is in between. We are consolidating through time right now. And we're at the end of summer. Volume was abysmal yesterday. Abysmal. The lowest volume, I think, on the New York Stock Exchange this year so far. So right now, we're in between. We're in between whether or not we're going to see some further rate hikes in September. Now, I would think the Fed really needs to do a good job at increasing rates. They'll lose some credibility here. The advanced decline lines, let me see if I can find those for us. Where I want to find those here. So we're seeing these are advanced decline lines. We're seeing the 200-day moving average. There's a 200-day moving average, right? Look at the symbol here of the S&P 500, $200 DMA BSP, right? There's the 200-day moving average that are below the 200-day moving average. Stocks below, there's 295, there's 206 above right now. Some of them could be right on too, and there are some duplicates in the S&P 500. But we're seeing that did turn around dramatically. I mean, look at this low. You don't see that very often. 50, we're above, only 50 at this point, we're above their 200-day moving average when the bottom fell out of the market. Now we're getting to those high levels where it's kind of like at least half or so above. Still not the highest we've ever seen. I mean, look at over here. You have everybody in the pool over here, right? This is April of 2021. Everybody was above the 200-day moving average. That is an interesting trend, but then it's going to really start roll down here. It still wasn't terrible. You have 200-300 above. It's pretty good. But now we're starting to get, that roll down. It's starting to turn around and get better as the trend has reflected back. Very interesting. Okay. All right. What else we got here? Actually, I guess at the end of the day, we picked up a little bit. It's not the worst day of the year, but pretty bad. One of the top 3 worst, I would think, for the year for the New York Stock Exchange volume. The other thing that I want to show you is this. Talked about this. We see that the Spearman is starting to come down very dramatically. Big roll up. There's the McClellan based on advanced decline lines. And we're seeing it start to pop up. Still negative. If you hold today, you'll probably be above. But we are starting to see that the Spearman, interestingly, I want to refresh this here. Yeah, Spearman is really, that's interesting note on that. Usually you don't see the Spearman really bottom out until the bottom. And what we're seeing here is Spearman coming down pretty hard. Usually it's interesting. It's really, I guess, tailed off from that big move up and then rolling. It should start rolling up here. I find that interesting not a false reading, but something to pay attention to, I suppose. Okay, hope trade is alive and well. Like I said, right now the hope is that the Fed is not going to put too much pressure on stocks moving forward. Here's some stocks we're going to watch, and again, some of the ones that you want. I'm going to just go right to the charts, and I'm going to show you. We're going to do. I'll change this up a little bit today. We'll do a 30. Oh no, over here. Sorry. Let's do a 30-minute just for the heck of it. You'll notice something about 30-minute. 30 minutes is very choppy, right? 30 minutes is all the way back to 8.8, and you'll see you really want to look at this chart. You could get thrown out. Peloton did gap up yesterday dramatically, then gap down. These are areas you don't want to play with. Once we saw this gap right here, this 90 down to 55, you knew there was a problem there. Peloton had a lot of news. The aileron showed that this is a trending and oscillating indicator. So trending and oscillating indicator. So many of them are similar. You got a MACD, you got an RSI. There's a whole bunch of other ones that you could see out there. And what you want to see is when they're above the line, usually, again, many of them have very similar characteristics, but some differences. You want to see them above the line. You want to see them trending in the right direction. You start seeing overbought signals that we added to this one in particular, and then it rolled down. You can use those in conjunction, of this. So we have a replacement for the aileron coming that's going to be a part of the new package, by the way. So when I say replacement, enhancement, I should say, but it's going to be called something different. So what happens is now you have this situation in Peloton that really nothing looks good. You got, again, remember we talked about this, right? Just a moment ago, this idea of consolidation through time, right? We see this consolidation through time and it moves vertical, horizontal through time. But that means consolidation. And vertically through time, we got the price. I mean, I'm tripping up my own words here today. Vertically through price, and we go like that. So where are we now? Big move up here, backed off right at the top line, right at, we can, oops, draw us. No, it's not working. Yeah, no, my line's not working. Let's do something different. Let's use this line too here. You just kind of pull that, and you got right within a range that was a top end from some previous highs. That was a problem. Not really worthy to spend a lot of time on this. BBBY, you might get involved in that move that was just ridiculous. I actually picked up a piece of this right about here, sold it about here, said I'm done with this. It broke above again, another line, but this wide level, look right here, and this is, I think, two at the same level. Oh, it's all the way down here, actually. Oh, it's all the way down here. This incredibly wide from 30 down to 10. That's like a 200%, depending on how you look at it. It could be a 70% if it's on the downside, 200% on the upside. This is too wide of a range to even think about trading on a daily basis. What you want to do is start looking at lower time frames, and you could have picked it up here about 16, and you would have been all over the place and maybe sold it right back. I don't even know. I don't even see it. It's right about up here, I guess, if you would have held the next day, but you wouldn't have done that. There's no way it's ridiculous. Yeah, I mean, people made millions. They also lost millions on this. I'll be honest with you. This whole thing was a major racket on this. I'm not even going to spend any more time on that either. I don't like it. Snowflake, interesting. You wouldn't have been able to caught this on a daily basis. We're in a big downtrend over time. Aileron really didn't show much. It showed that we were coming in. And then what we saw was this nice earnings move up to the highs, right? Right in that range, closed right about, what closed at 195, right about here. So we're in some area of overhead, not much though. When we look at this, where it's closing right now, I would say that possibly your big move really is to 208 on Snowflake if it can maintain its momentum. But really, this again is another example. Now, why I'm showing you this is another example of a lot of consolidation through time. We had this whole area that was a consolidation after significant movement horizontally through price. Let's see here. I've been mentioning this, and there was finally some, let's click this. There was mentioning this one, and finally moved out of the position since last time we talked. Down to the 1.75%. This rose up. This was the monkeypox theory that was going to move up on. We got a nice call out at 23 right there, and then it was starting to move down, and then a short call came out on this. So there's a little bit choppiness on here. You could have held this for a while, then out, then held this for a while, then out, right? You're buying on the yellow, or theoretically the bias is on the yellow, which is the alert. The green starts to play up. You start to get in and out. No loss, no gain, really right here through this range right here. And then you did a buy. Long bias at about 14.5, would be out somewhere about 18, buy in again about 18, out of it about 25, or what was that, 20, 24. And then you were out of the position, saved you from move. The aileron, the oscillator really dripped down dramatically. Again, very difficult to see that. And even if we take off the radar to see a little clearly, 30-minute, this is the problem I have with some of these, these hard movers. Let's take it down to 10 minutes. I mean, could you have caught that if you're watching from there to there? Maybe, but that was really right on the open. And then what? Then you get chopped up, chopped up, chopped up, chopped up, chopped. And then you got a nice move here at 18. It moved down to 18.25 or so. Let's see, 18.92. So a 50-cent move, which is nice if you're trading big numbers, right? Very good. I like it. However, again, what are you in this for? Are you in this for trying to pick off 3 cents? Maybe it works. Preferably do that with futures, I think. I don't know. A lot more bang for your buck there. But if you're in this to do a little bit more work for your portfolio, what I mean is to make money. The longer time frames have you maybe trade a little less in your overall sizing, but there are greater opportunities. And more importantly, use multiple time frames together. You have charts like this sitting next to each other. I'm really focusing on the charts because that is what you need to really understand, how these all look and work. Where are we now? Again, I mean, where is the downside here? Could the downside be to 17 for the next part? Could it be down to 15? Could we go right back down to that 13? If we did get back to 13, I'd put an alert right there. 13, let's call it 13. Let's just say 1350, just for a number. 1350, I would put an alert that if it did get to that level, I may start picking up a little bounce trade moving on that. Spelunk, splat. Again, these terrible moves, these very quick moves through time, very quick time moves through price, and then these consolidations. This is a wide consolidation. I mean, from 90 to 114, back down here, up a little bit today after yesterday getting just slammed. Closed right above some key support right there. Really down to 89 is where your level is right here. Just rolled over the last few days, though. You would have said, something's not feeling really good about this. Into earnings, Splunk got splatted. Some Chinese names have gotten a little bit of a lift recently, up again today. There's some discussion about, I mean, look at that. I mean, we're down from 80 down to 22. Delisting is possible on some of these names, and that's why a lot of investors are staying away from them. JD's another one. Got a nice lift yesterday, nice lift today. Look at that. Phew. That's a 60-minute chart that is just looking beautiful. Could you have caught that here? Possibly, but look, if you didn't catch it here and you said, I like it, you could have gotten in here. Now, the reason why I say that is you could have said, I do like this position. Where are we? You would have been, this is 824. You would have still been below on the daily. You could have nibbled in a little bit, got out before the day was over, back in. The problem is that really the indication came yesterday. So you would have combined your 60-minute with your daily over here, and you would have said there was some opportunity here. But the problem was that, again, you got massive amounts. Where is it now? At 68. It's above its line right now, which is interesting. 67, 68. It's pre-market, but you're above all your lines right now. But then you got another mess of massive amount of resistance, right? Support becomes resistance, resistance becomes support. And right here is just a block between here and here, between 68 change and 70, massive amount of resistance right there. Get through there. You got to contend with all this whole mess right here. You see this? That's the point. Messy right here. There's a blob right here that you have to deal with. You got to work out all these people that bought here. And there's like, oh man, if it ever gets to this price again, I'm selling. After it came down, it went like this. And like, oh, it's going to come up. When it gets there, I'm selling. That's what you got to need to get rid of. The overhead supply, we call that. It's resistance, no question about that. This one also, BABA. Oh, I click BABA. BABA up again 6% today. Very nice. You can play these through this. By the way, if you don't want to play and look at that, you could use the KWeb, Crane Shares CSI China Internet ETF. This is we'll track most of these stocks pretty well. Again, major consolidation. Just look at this. We looked at this at 39. It's a drop below there. You got real problems. Well, it did, didn't it? Big problems. Came down in March, down to what is that, $20? Now 30-50% higher since it was in March. Well, that's great. A lot of things based out there. They're a little bit of an advance of where we are, because we bottomed out really over here, didn't we? This is where we bottomed out. They peaked out again in that range. So they're picking up again right here. Could be a good sign a few months from now for us. China seems to be ahead of the curve a lot of times in these areas. CRM came out with earnings yesterday, disappointed, down again today. Really a fall from grace from 300 down to about 160 right now, towards the bottom of its level. I don't think, let's extend this. I'm just kind of curious. Yeah, we didn't hit that pandemic low yet, but we took back every single penny to speak of from where we were. I mean, before the pandemic in 2019 at 161, currently trading 173. Okay, big deal, right? But pretty much took all that pandemic benefit back, and employment is still good. And the problem we have now is, what's next, and what people are asking. Futures starting to tick down as the realization is, we got about half hour till power. Nvidia did a nice turnaround yesterday, beautiful turnaround, right? So Nvidia, quick short call, got you out real quick. This was a few days ago, was up yesterday on a really rotten number, traded down as far as 168. So if you were short, you could have possibly gotten out of that if you wanted to, but there was really no call until you got above the 60 minute. And when you start to see the lower time frame start to get change, and they start to see that there's a significant amount of movement on the upside, reversal off of a really poor earnings outlook, now that's something. We got some questions about WES. I know I moved quickly. What is this? Western Midstream Partners. It's oil and gas. Everybody loves the oil and gas, right? Where is crude this morning? Down slightly. So this is going to track pretty much the benefits of that area. That room. Yeah. This is Vera Mobility, another good stock, a lot of volatility, stuck in a range right now. You got to clear this, right? You got to clear way above this 1738. You're at 1704 right now. I don't know this stock at all, but Vera Mobility, you got enormous consolidation with an uptrend though. I mean, if you did want to draw a line, right, you just take your where is my here trend line, and you can kind of draw some trend lines. Let's draw the one. And you'd say kind of in that channel general. I mean, there's not a really good one. I spent a lot of time on this. Hey, what happened? There we go. You're in a trend line channel right now. It's moving higher. That's good. Break above this area right here. I would think that you have some opportunity right there. All right, listen, we're backing off again. Half hour to Powell. We'll have this on the YouTube channel over on TriggerCharts. Make sure to stay tuned for everything that's happening. You're going to be really happy. I want to make sure you are going to get what you need. And I think that we are going to have a real good September coming up. So stick to the indicators, make sure that you're patient, you observe, and you do your due diligence. Until next week. Oh no, next week, we're not going to be here next week. Next week is Labor Day weekend and all that. We're not going to be here, no session, but the week after, you need to be here because the big announcement of everything that's happening, you'll see the new indicators. So it's 2 weeks from today. So don't go anywhere. Stick around. I'll see you again then. Thanks so much for joining me.